Supply and demand. Supply and demand is what determines market direction. That is to say, when the demand is high, price moves up, and when supply is high, price moves down. In simple terms, in an uptrend, demand is in control. And in a downtrend, supply is in control. The market is an interaction between buyers and sellers. And through supply and demand we can get to know who is in control. Where demand represents buyers and supply represents sellers. At the start of every impulsive move, there is either demand or supply that led to this impulse. After every impulse move, it is always followed by a pullback before a continuation. No one knows what the market is going to do next. That is why we look to get into continuation trades after the impulsive move happens. Now the question is, how do we identify supply and demand? Allow me demonstrate how we can identify supply and demand in the next examples. Step 1. Identify the trend. This is essential because we know that in an uptrend demand is in control, and in a downtrend supply is in control. Let us use an example of a downtrend. We will be looking for supply zones since the market is in a downtrend. Please watch the video about market structure before proceeding to the next steps. Step 2. Identify and map out the current swing high and swing low. Now that you are done mapping out the current swing points, wait for a break of structure. When we get a break of structure, this confirms our new supply range. In a downtrend, a supply range is the range that takes out the current swing low. Price will always pull back into a supply range before a continuation to the downside. Step 3. Find and mark out supply zones within a supply range. You may want to note this down. We look for supply zones only inside a supply range that breaks structure. A supply zone is an area where a lot of sellers came into the market leading to an impulsive move to the downside. When marking out supply and demand zones, we look for an impulsive push in price, and at the start of that impulse is where we find true supply and demand zones. Let us see how this type of price action is represented using candlesticks. This is what we call a buy to sell candle, and it represents the area where supply got into control. The engulfing candlestick represents impulsive move in the market. The engulfed candle is considered as the range in price before an impulsive move. This is what we look for when marking out supply zone. When marking supply zones, we draw a rectangle around the engulfed candle or the last buying candle before price drop. When the market taps into this supply zone, price will always drop. Now let us have a look at the demand zone perspective. This is what we call a sell to buy candle, and it represents the area where demand got into control. The engulfing candle is considered as the impulsive move in the market, and the engulfed candle represents the range in price before the impulsive move. This is what we look for when marking out demand. When marking demand zones, we draw a rectangle around the engulfed candle or the last selling candle before price gave an impulsive buy. When the market taps into this demand zone, price will always shoot up. Now that everyone is familiar with what supply and demand is, let us take a look at some live chart examples. Here we can see that the market is in a downtrend and is making a series of lower highs and lower lows. Now the next step is marking our swing high and swing low to keep track of our current swing structure. Now that we have track of our swing structure, let us wait for a break of structure to confirm our supply range. This break of structure confirms our new supply range. Let's mark out our supply range before continuing to the next step. We will be looking for engulfed buy to sell candles within this supply range, and we shall be marking them as our supply. This is the last buy to sell candle before the impulsive move, hence proved to be a supply zone. When the market taps into this supply zone, we will likely see another impulse to the downside. Let us wait and observe what happens next when price taps into our supply zone. The market has now tapped into our supply zone, and remember, for every supply zone, price is expected to give a major sell. Price is expected to take out this swing low since the market is in a downtrend. You may want to note this down. Supply zones is a great area to get into sell trades. Let us wait and see if price will follow our expectation. We have a break of structure here, which means that the market has completed its objective. This break of structure also confirms our new supply range, which means that we have formed new supply zones. Again, let us mark up our new supply zones and observe what happens next when price taps into them. The market violated our supply range here. Now let us wait and see if price will tap into our extreme supply zone. We have a new break of structure here, which means that we have also confirmed a new supply range. Let us mark up the supply zones within this range and then wait to see how price will react. The market tapped into our supply zone and then gave a nice reaction to the downside. Now here is what we are going to do. Go back and backtest based on the previous examples about supply and demand. You may also consider joining our public Telegram community. Link is in description. Please like, share, and subscribe for more trading related content. Thanks for watching, by the way.